Hi, this is Greg. Doing the SPY Weekly update for February 20th, 2023. Today is President's Day, so we actually don't have the markets open in the United States. Now, that being said, other markets around the world are open. Um, I just thought I'd get a little bit into it as far as the SPY that I like to do weekly and maybe talk a little macro and hopefully not run out of the 20-minute time limit on TradingView. And I know nobody wants to watch 20 minutes, so I'm going to try to talk fast and go fast. Anyway, if you're watching on TradingView, please hit the little boost button and I get a like. I don't know what that really does. If you're watching this on YouTube, please give me a like and subscribe. It helps it keep me motivated to have them. I don't get the YouTube money. You got to have 1,000 subscribers. I'm just hitting 50, but hey, you're go ahead like 4. So thanks for everybody that did subscribe. That being said, let's just jump into it. All right, I'm going to look at the monthly SPY. Now, probably those of you that have been following me notice that a lot hasn't changed since last week, but just a quick review. I like to put a white channel, pre-COVID channel, I call that. So I want to see. My goal is to get back into that and get some earnings that the PE ratios are back into the same amount before I start burning up dry powder. Um, anyway, so that's what the white lines are. The green is the blow off top we had post COVID. Again, this is monthly, so this is a 2020 here, right? When we peaked out the end of 2021, you can see the steady decline we had last year. I did fib that out. You can see it retraced about 50%. I did find it interesting that where it bounced a couple months ago was right at this 50 period moving average on monthly, right off the COVID channel. Never made it into it. That's what I was hoping. I actually thought it would come down to the 618. Maybe it still will. We'll see. Fundamentals say it should be in that area. But one thing I want to point out is we did close January outside the rooftop. We're on track to close February outside the rooftop. That being said, there's probably, I don't know, 6, 7 days of trading left. So this, I guess you'd call it a hammer candle, or no, shooting star. If it turns into a red shooting star, which just means the close is below the open, this one, the close is still above the open, so it's green. It would have more strength. We'll see if it retests this trend pattern as well. But right now, when I look at the momentum indicators, I go, it's kind of on a downtrend. The moving average is on a downtrend. The MACD is also on a downtrend, although it's starting to duck bill here. And if you look, really, maybe right here we're going on a little uptrend, right? So I don't know. But it's definitely worth watching because I don't want to miss another one of these or any of this. I definitely made some mistakes in this area. I think a lot of people did, and I missed too much of this. Anyway, so I'm going to keep moving on. We're going to jump over to the weekly. Sorry, you don't get to see my ugly mug. For some reason, it only shows on the the screen I started the video on. Luckily, now I can at least capture the entire screen. So this one, let me hide some stuff here. One thing I'll point out is we went from, now this is a weekly again, so here's COVID, here's the blow off top, here's the end of 2021, and then here's all the bad news 2022, lower, low, lower, low, low, lower, low. But now we're getting into when we hit this low in October, which you hear a lot of people talk about, we've had higher low, high, higher high. Okay. Momentum indicators starting to rise, curling moving average starting to rise, MACD's on the rise and widening. Let me put my indicators and stuff. Now I mess. I put all the Powell Howells on here. I'm sure everybody gets a real big kick out of that. I also put an anchored VWAP from the beginning of the year. And what that's telling me is, see the last 2 weeks? We got multiple things it's fighting with here. Okay, so both of the last 2 weeks, Are they dojis? Or are they hammer reversal candles? Or I'm sorry, shooting star reversal candles. Um, Technically, I would call them shooting star reversal candles, but both of them bounced off this anchored VWAP. Now, I would have liked to see last week get green. I actually lost a beer bet on this one, but there's definitely some support here. Also, note this green triangle to me dictates a bullish moment. You know, it should come out, retest, and maybe run, or come out, retest, and fail back in. Um, I'm pretty positioned either way personally. Um, it's more fun to watch it run, but my dry powder says it'd be nice to get back down in here. Even if we get back to some of these October lows, I'd be a buyer. So that's my take on the the weekly. Um, Switch quickly to the daily. Um, Turn off my patterns. What I see in the daily for the last week is kind of a lot of just chop, maybe in 2 weeks even. Interestingly, Thursday we had a definitely shooting star, powerful reversal candle off of a high, came down, but immediately got reversed into a hammer candle, which is a reversal candle. Um, so it's showing strength all above the moving averages, but we do have trending down RSI. We do have a crossover in the MACD, a death cross they call that. So it's definitely worth watching. Like I mentioned, we are above all these moving averages, 50, 100, and 200, I think. Where's the 300? Anyway, should look for that. I'll do that when I'm not recording. Um, so that being said, let me get my patterns on here. One thing, I'll zoom back out. I know this is going to be ugly crazy. This is the same white channel we talked about in the monthly and the same green blow off top. Just it gets a little dirtier because we're in a shorter time frame. One thing I wanted to point out is in the downtrend of 2022, what I see changed. Okay, we whipsawed in here, up, down, up, down, up, down, up, down, up, down. Oh, okay, low, higher low. Are we looking at a potential for a higher low? To me, this does look like a bull flag in here. Okay. The moving averages are still trending up, even with the MACD breaking down here. Maybe this just needs some breathing room. Maybe I'm too optimistic. Like I said, I do believe in fundamentals, and they just haven't worked in so long. I have to consider that maybe I work around them until they do work, and then I'll work with them again later. Anyway, looks like a bear or a bull flag to me. We'll see what happens on the daily next week. We had some interesting news last week, so get into that. Now, here is a 5-minute chart. And I watch this intraday, usually have it on another screen while I'm doing my real work. And I keep an eye on it. Now, again, we're closed, so you're not going to see any action in today. But if you look back on Friday, we gapped down from Thursday. Thursday was the Bullard nonsense that happened. Let's see. Yeah, what did we have? Barkin, Logan, Harker, Williams. Where was Bullard? I thought that was he was in there. No, he was. This is this week. No, that was last week. Anyway, I'm not going to waste everybody's time looking at that. One thing I'll point out is I do have it notated. That's when he spoke, and that's where we crashed out. This happened with Jackson Hole and Powell Howell. That's why I don't like these guys talk. They say one thing and do another. I don't know. Not a big fan, but I understand it's the data we get to work with. Oops, I'm going crazy. One thing I'll point out is the DXY, which runs regardless of holiday, pretty flatlined. So if the dollar grows, that's a headwind to equities. So we got to keep a close eye on that. I'll jump over to the Kospi, which I watch. This is from last night's price action. So they sold off, recovered, basically ended flat. The Kospi, after the Kospi's over in the middle of the night, the DAX opens. That's Europe. I like to use the DAX to look at how it follows after the Kospi because they overlap a bit. and the DAX also just kind of ran flat. And my guess is that all has to do with the fact that the U.S. markets aren't running right now. The VIX, man, we had a run up back on the 16th, and then it just kind of faded. So we'll see where that opens. Again, options data is very good for traders because the higher the VIX, the bigger the headwinds to the equity market. So that's kind of where I wanted to talk about those patterns. Here's a VIX daily, which is a good segue. We've been down. I started thinking this was a wedge or maybe it's a channel, but then it finally broke out of it. I'm not sure what to make of this. Don't read into my pattern too much. To me, it's starting to look like a megaphone. If that's the case, that tends to be bearish, which is odd because I'm expecting the VIX to go up. Even the momentum indicators, even though this is a daily, so who knows? The VIX has really not done much, and a lot of that could have been pinned to options expiration last Friday. Third Friday of every month has options expiration, and they pin put and call walls and things like that. So I won't talk too much more about that, but we will jump into maybe some yield stuff. Or here, let's look at the inversion of the curve. So the inversion of the curve still pretty bad, right? That's the 10 minus 3 month inversion of the 10 minus 2 year. I mean, look at that. That's horrible. Growth to value index, which is really just taking the growth ETF and a value ETF. I'm seeing value come back into play, so that's kind of cool. We'll flip over here. Financial conditions, right? That's why the Bullard's out there bitching, right? Because he wants to be a hawk and talk down the market. Well, oddly, Friday, actually, this is an inverted chart. So green is down, red is up. And then I overlay the S&P 500 on it so you can see how it kind of follows financial conditions, right? So what I'm seeing is financial conditions tightened, but then this last day they eased, which is, I don't know why. So you see this little tick up. We'll see how this ends up going. I wanted to talk quickly about yield curve, right? So we started, or yields. Just looking at the tenured, which can be a headwind to the equity market. You can see we're right at a resistance level. We get over this 4%. I mean, we could be going 4.25 pretty easy. That would be a problem for equities. Mortgages, 6.32. I saw an average on a mortgage app I follow because I'm a real estate investor also, where they're really actually closer to 7%. It's probably when this updates. Yeah, it's haven't updated yet. We start looking at oil, gasoline, gold, silver, commodities. I don't see a ton going on that impresses me or worries me. I think there was some talk about gold maybe as a potential. To me, these numbers are just too high to buy commodities. I'm a long trader. I don't like to swing a lot and all that sort of stuff. So that being said, let's get this back to the VIX so I don't lose my patterns. Fear and greed, we're still up in greed, right? FedWatch tool. Okay, we were back up to we're up to a 21% chance of a 50 basis point rate increase in March, right? That's was 25 was baked into the cake. So now we're seeing this change. This number was literally 89%, I believe, last Wednesday before Bullard spoke. So that's a headwind to equities. How sectors closed. Well, this is just on the day, so we won't get into that. This, by the way, is another way to watch the I call it around the world. They don't show the Kospi on here. I wish they would. Some people are saying watch some of these other markets because of the China reopening and things like that. But it does show the DAX. By the time I'm awake, usually this is what I want to see anyway, and I can flip back to the Kospi because it's already closed. As far as, let's look at last week's economic calendar quick. We had PPI, which came in bad. It got bought back up. We had some interesting retail sales numbers that were actually quite a surprise. So people are still spending money still. We had CPI last week, which I would say was somewhat in line with the headline numbers, even low. They were in line, but lower than last time. So the president's out speaking up. Everything's getting better. But if you get into the weighted systems, there's still some sticky issues, especially like with housing, and I see used cars are on the rise again too. Interestingly enough, if we go back in the weekly, none of that made a big difference. Monday, Tuesday, Wednesday, it was really Bullard that made the difference. Um, so again, though, I guess if you look back on a weekly and I take out the patterns, you'll see we really haven't gone anywhere since 21. 2021, April 2021. That was literally when our last time the price point was that thing. So uh, that's disappointing to me. Um, so for next week, what's the big deal, right? Coming soon. Here we go. We got some flash PMIs. I don't think those move the markets as much as everybody. Existing home sales, I'm interested in that. Again, I'm a real estate guy. I don't think they move the markets much. These auctions, I've been recently paying a little more attention to. They can make a little bit of moves in the market depending on how successful they are or not, but it's nothing I'm going to get worked up too much about. We have FOMC minutes. That'll be interesting. We have initial, well, that's kind of a weekly thing. Initial jobless claims, continuing jobless claims. We'll see if that continues to the way it's going. Most importantly, is we get a lot of PCE data on the 23rd, which is Thursday. So that's what I think we really need to pay attention to in the week upcoming. I think this is just an easier way to look at it. GDP we got also on Thursday. Looks like some Fed speak. Oh, Mister, complain about everything again. Some interesting stuff there. Bostic. Okay, so we got that going on. Anyway, that I think wraps up my video for this week. I went a little longer than I hoped to. Hope we make it short because it was a short week. But there actually is a lot to talk about if you consider last week's calendar, next week's calendar, or I should say this week's calendar. Also, all the different data points that we cover on the SPY. I'd love to go deeper into my watch list, but frankly, it's just not enough time and would bore the heck out of you. So that's all I have for today. Again, if you enjoy these at all, if you like them, please like, subscribe. Um, you know, also hit the little boost if you're watching this in TradingView. I'm trying to get it to just keep motivating me to do it. I draw these charts regardless. Takes me a long time to do the publishing of this, and I'm hoping people enjoy it, and I hope it's found useful. So, thank you for watching. Again, this is Greg for the week of February 20th. I will also add some links below into some of the charts that I'm watching, including the inverted yield charts that I posted on TradingView, that you can actually follow, as they go along after I posted them. So it's kind of cool. All right. Thank you kindly, and good luck trading this week. We'll see you next week.